Good day and welcome to this Focus On segment. I'm David Rademeyer. We're here at the Africa CEO Forum, where corporate thinkers and policymakers gather to discuss how to reshape Africa for a better future.
I want to know from you, in your position at MSCs, that relationship in the economic sector between stakeholders and partners is very important. A platform like this, how does it help fostering and growing that relationship?
Thank you for inviting me. I think that specifically in Africa, connections and partnership are very important between business actors, private sector, but also private and public. So you need to meet people, you need to discuss with people and try to see how to partner, because we are pushing companies to grow across the continent. And you cannot do that if you have not some local partners, some financial partners, some actors. So partnership is key. And today, this Africa CEO Forum is really the biggest private sector platform in the continent. And it's very important for us as business actors to be here. And specifically after 2 years of pandemic, we need to reconnect. And it's a very good occasion for us to reconnect. And really, I push also my other private sector fellows to be in this platform, because I think it's key. I think that there is a really new period, a new environment in Mauritania with first a new president, the creation of an agency of investment, which is new, and also the decision that have been made at very high level in this country to push industrialization, transformation of resources, and really to have an industrial sovereignty. So there are a lot of opportunities that are there, and it's important for Mauritania to promote it. So yes, as it's a big platform of investors, it's a good occasion for the country to present all those investment opportunities and the new investment landscape specifically to the investors. So that's about what we will talk.
We cannot escape the fact that Africa does get the bitter end when there's global tension.
Yeah.
What is your new strategies aligning with Fraser in help cushioning that impact?
Yeah. Look, I mean, I think the twin crises of energy prices and food prices arising from the war in Ukraine and other factors as well, but exacerbated by the war in Ukraine, they show that in our interconnected world, events on the other side of the planet can have a dramatic impact. But they also highlight the strategic vulnerabilities of the African economy, and at the same time point to the strategic actions that need to be taken. I believe that African policymakers and governments need to mobilize and facilitate dramatically greater investment in renewable energy. Africa is blessed with more sunshine than anywhere else in the world and has the possibility, the opportunity to become the first and the only continent to industrialize using renewable power. And Fraser Bank wants to play a role in financing and facilitating that. But then look at Africa's dependency on imported food as well. This is a continent that has a low density of population, that has more than half the arable land in the world, but is not exploiting it productively or efficiently. So I think the other focus for African government has to be in transforming African agriculture to be professionalized, to be of world-class standards. And I think those are probably the two areas that African governments need to get right: renewable energy and agriculture. And that's where I see the opportunity ahead.
These investments, they do speak about going both ways, getting foreign direct investment and vice versa. How can Fraser or Mauritius harness this local and foreign flows?
Absolutely. You know, transforming energy, transforming agriculture in Africa is going to require mobilizing local, domestic human talent, human capital, domestic entrepreneurial energy, but it's also going to involve mobilizing international intellectual capital and financial capital. And that's where Afrasia Bank can play a catalytic role. For example, when I was flying to Abidjan the other day, I was sitting next to an African private equity fund manager. He's set up a Pan-African fund investing in African healthcare and African insurance companies. He's already a client of Afrasia Bank, so that fund has accounts with us. But now we're going to explore Afrasia Bank directly financing the companies on the ground in Africa that his fund is investing into. So that's the role that Mauritius IFC can play. It's not just about international funds going into Africa, it's about successful African companies going regional as well.
Visa is here representing the digital disruptors at the CEO Forum. Would you care to expand a bit on that?
Sure. Thank you first for having me. And it's really something we're passionate about because we believe that technology is playing a key role in offering opportunities to the continent. And having these startups embrace technology to create sustainable businesses and challenging the status quo and really disrupting the different industries they are operating in is very much in line with what we believe should happen in the continent. We do it from a fintech standpoint and a finance standpoint, but these players are just doing a phenomenal work in challenging again the current status quo and creating opportunities for the continent, which is phenomenal.
Now, these opportunities, obviously it needs to go cross-border. Is it making things easier for these fintechs to trade or to negotiate or make payments cross-border at least?
You know, fintechs are creating opportunities in so many different ways, be it in terms of creating access and, bringing into the finance and the formal finance ecosystem small merchants, for example. They play the role of aggregating these merchants and giving them access to digital commerce, which is phenomenal. And while they do this, they create all the value-added services, or they make available to these merchants all the value-added services that are so key for them to do business. So that's one angle. On the other side, too, what they do is that they create access from a consumer standpoint, creating possibilities to accelerate virtual credentials, for example. So leveraging technology, the mobile technology, to offer card solutions to consumers. Imagine the power of leveraging a telephone and the access to mobile phone to just enable further payment. It's just phenomenal.
What is the MSC's growth outlook for the year?
Well, in line, I think, with most others, we're of course seeing what's going on around the world with inflation, with higher interest rates, and we have seen also year to date the growth has, come a little bit off. But I think one has to be careful making too many comparisons, because if we compare to the first quarter of last year, that was really a boom period for trade, for shipping, for transport, and the same thing for us. So we would say we are still moderately optimistic that things will grow. There will be bumps on the road, but we still believe the world will trade and the world will grow.
On the back of the trade, though, ACTFA has been in play for almost a year. Have you noticed any remarkable changes at the given moment, or is it still too early or too close in its infancy phase?
I think it's early days still, but it's certainly a program that we back, and with our services, I mean, we call more than 60 ports weekly, have more than 100 services every week that we try to offer, and we have also a lot of intra-African services. So we are trying to offer things also where trade can start growing and boosting more within the continent. We see that as one of our roles to play as well.
There's no way that people cannot talk about the impact global tension had on the banking systems. They had to take quite a bit of the grunt on that to help curb inflation in the economy. What is your view on that impact on the banking systems?
Sure. So when you think about global tensions, including the ongoing military conflict in Eastern Europe at the moment, we really think about three potential transmission channels. The first one is the transmission channels through commodity prices, commodity and food prices, so through inflation. The second one is transmission channel through tightening financing conditions, and then the last one is transmission channels through security challenges. This is where, when we think about the implications globally, if you look at African banks, the first two transmission channels are the most important. So the first one, price and price inflation for food and energy, and then the second one being tightening financing conditions. The implications for banking systems is that consumers are facing higher inflation. At the same time, they're facing tighter monetary policy from their central banks. So that would affect their disposable income as well as their repayment capacity, and that may lead to some asset quality deterioration. Again, as you know, Africa is a large continent with differences in the implications depending on where you look at. So commodity exporters, for example, are benefiting from higher commodity prices. Take countries like South Africa or Angola, for example. But countries that are net importer of foods as well as oil are countries where we expect the operating environment and the banking system to face more challenges from this higher inflation.
That brings us to the end of the first day at the Africa CEO Forum. Do go to cnbcafrica.com to catch the interviews in full. Until next time, goodbye.